And now investors trying to understand with 4 trading days left, what they should be doing with their money. Ben, how do you feel about small caps?
Morning, Seema. Happy holidays. Well, this is a sector that will potentially perform because if the Trump administration comes in with everything they've announced, you could expect the economy to pick up next year. I do think the economy could grow more like 4 or 5% range. Is why also treasury yields are higher, I think, anticipating that. And that environment growth, should drive small caps. So I do think it's a good sector to be in. It's obviously far less valued than the large caps. I think there's a lot of deep value there too. So it's a favorable sector. I would agree with the survey.
Delano, if you had to pick, where to put your money, tech versus small caps, where would you be leaning towards?
I think to start the year, you can kind of be a little bit heavily weighted to small caps. I agree with the assessment. There is value in small caps if you look how it's traded and performed this past year versus big cap and large cap. It's kind of a little bit underperforming in some respects. And so I think there is value there. And I think you're looking at breadth of small caps. There's less concentration risk as well, right? If you can pick up some of these names, there's less concentration risk in that area, and also they're becoming more profitable. And I think, as mentioned, if you're looking at the environment in the economy that we think is setting up for 2025, there will be more profitable companies and more value there for investors to look at. And I think being weighted a little bit more heavily towards small caps would be a good thing.
Delano, if we focus in on tech, though, Apple, at record highs, this $4 trillion market cap watch. What do you make of valuations broadly for the tech sector?
For the tech sector, it's getting to the levels that will make investors think, obviously, before putting cash to work. I do think there's going to be more room to run and more momentum to start 2025. There's differences and there's optimism. You feel it for investors and obviously just in general on the macro level. So I do think having a position in tech is something that we always are favorited for. So I think that's an area for investors to stay in. I do think look at the levels and watch where valuations are, watch earnings. There might be opportunities for investors on pullbacks later into the year to get back into mega cap tech if they're not already.
Ben, if we pivot to some of the other sectors that outperformed in recent weeks, and I was just looking at how stocks performed even on Tuesday. Consumer discretionary, Tesla was up 6%, Amazon, Starbucks. What does that tell you? Are investors sort of positioning themselves to sort of bet on a stronger consumer going into 2025?
I think we could say that, Seema, because as much as there's fear about tariffs and that it could affect the economy, it actually, the outperformance says it's not. People probably see this as an opportunity that, either there's going to be more money coming into the United States, driven by a stronger dollar, driven by the prospects of the economy, plus people are just feeling upbeat about the economy in itself. And if you take those sectors that you mentioned, like particularly consumer discretionary, you take that valuation relative to large cap, and that's a big gap there too. So people are incentivized to buy more consumer discretionary with this view on the economy getting better rather than worse. So I think this is why that's happening. In addition, there's just rotation ongoing. So I do think that the rotation theme in itself will continue to have momentum in the first quarter.
Okay, rotation continues, but the move in yields, Ben, I know you've been writing about this a lot. Does that worry you?
It's certainly a big move as we're witnessing. And I think, Seema, it's two things there. One is it's about the economy, so anticipation of stronger growth and the Fed being on hold and probably somewhat more inflation. But we also deal with a fiscal deficit next year that is going to have to be managed. And we don't have that entirely priced into the longer end of the yield curve. So it's a worry, but it's also a reflection of growth, both at the same time. We expect yields to go a bit higher from here, probably to this high that we saw earlier this year, around 4.75.
Delano, that was a big source of concern over the last 2 weeks. We heard from Fed Chair Jerome Powell, maybe not as many rate cuts expected next year. What are you sort of pricing in?
Yeah, I think, that's the bear case is if we see, for us, some spike in inflation data and a spike in, employment data. And I think that would change, even as we saw, we got a more hawkish Fed, that could potentially even become more hawkish if we see any of those things. So I think, our base case is that we do see a momentum rise at the beginning of the year. And I think as the Fed had pointed to what the strategy is, that's what we see going forward. Inflation is, stickier, I think, than most realize. highs, especially taking that cumulative look at what we've seen in the inflation data. So I think they're going to be really persistent on that. So we're looking at the base case for still momentum, but being very cautiously optimistic, Seema.